Hi my dear friends and students. First video பார்த்திருப்பீங்கன்னு நினைக்கிறேன். யூஸ்ஃபுல்லா இருந்திருக்கும்னு நினைக்கிறேன். எல்லா டாபிக்ஸ் எக்ஸ்பிளைன் பண்ணியிருக்கேன். இந்த செகண்ட் வீடியோல கம்ப்ளீட்டா ஒரு எக்ஸசைஸ் சம். ஓகே, covering all the journal entries, basic journal entries. How to use the golden rules for journalizing the transaction. That is the topic I am going to explain now. Hope you would like this and hope you would be able to understand. As usual, I would like to have your valuable comments in this second video also. Thank you.
Okay, now let us get into the exercise sums on simple journal entries. Okay, by making use of the golden accounting rules which we have seen in the earlier video, that is personal account, real account, nominal account, golden rules for debiting and crediting aspects. Now we have got a set of 8 transactions. For all these transactions we have to give the journal entries. How do we do that? And how do we apply the rules we have studied earlier? Journalize the following transactions. This is the example sum we have got. We have taken a set of 8 journal entries starting from April 1st of 2015 for example. Here we have got one Mr. Ganesh commenced business with cash of rupees 10 lakhs. And on second opened a bank account with rupees 5 lakhs, purchased goods for cash rupees 2 lakhs. Here I would like to say, here this particular transaction is a cash transaction because the word cash is given exclusively, specifically. Even if the word cash is not given, like purchased goods, that denotes, that implies that is a cash transaction. And the next one, that is on 4th April, purchased goods from one Mr. Rahim. Here since the proper noun, the name of that individual Mr. Rahim is given, we have to take this as credit purchase transaction. Next, as I told you earlier, on April 5th, sold goods. Here, even though the word for cash, sold goods for cash is not given, even though it is not given, we have to take this as cash sales. So here, once we make the sales, cash is coming inside. Like that, we have to take it as cash sales. Sold goods to Abdul. Here, the name of the individual is given. So here, this is the credit sales. Mr. Abdul is our credit customer. Next is the salary payment made by way of check. Mode of payment is check. And the last one, receipt. Commission received. Rupees 30,000. All these transactions we have got. Now, these transactions we have to, for these transactions we have to give journal entry. The journal entries are to be given only in the specified format. What do we mean by format? That is naming each and every column on the journal book. That is, first date column, second particulars column, LF column, LF number. What do we mean by LF? Ledger folio number. In those days, we were maintaining all these, books in the manual method, manual form. Books of accounts, would be in a bigger size, very big books. So those the page number, folio means here we refer the page number, ledger folio number. That is, for this particular journal entry, where do we find the corresponding ledger posting? In which page of the ledger we can find the posting for this journal. So that link number is given here. So ledger folio number and debit amount and credit amount. So these are all the names of the columns required under the journal format. Now let us get into the application of the golden rules. How do we classify? Now let us analyze each and every transaction and find out which is the benefit receiving aspect and which is the benefit giving aspect. Now, as per the business entity concept, when the proprietor is introducing capital, that money is kept something like a loan received from the proprietor. So capital, as it falls in the credit side, it is a liability even, that we will study in the due course. So here cash and capital, these two elements are involved. So we have to understand basically in the transaction that Mr. Ganesh, the proprietor, when he is commencing the business, cash and capital. These two elements are involved. What happens to the cash? Cash is coming inside. So as per the real account rule, debit what comes in. So here the cash account is to be debited with the investment amount. At the same time, credit the giver. Who is giving this capital? The proprietor. So Ganesh's capital account has to be credited. So credit the giver. As per that rule, I am crediting the capital amount of 10 lakhs. So this is the journal entry for the proprietor commencing the business. Second, let us get into the transaction opening bank account. When I open the bank account, what are the two elements involved here? The benefit giving aspect and benefit receiving aspect. So the banker and the cash. When I am depositing money, who is receiving? Banker is the person who receives the cash. So as per the golden rule of personal account, banker is falling under personal account. Bank account should be debited because he is the receiver. And what happens to the cash? I am taking the cash from the office cash box and taking it to the bank. So cash goes out. Since the cash goes out, credit what goes out? Cash has to be credited. So I have taken cash to the credit side, credited 5 lakhs. Next is, purchased goods for cash. As I told you, this transaction could also have been given just like purchased goods. Even then, it also means cash purchases. Here, when I am spending money for purchasing the stock, saleable item, so this purchase is falling under the heading nominal account, expense. So this purchase, since the expenses are to be debited, I am writing purchase and entering that value 2 lakhs in the debit column. Now, when I purchase the saleable stock of goods, what happens to the cash? Cash goes out. So credit what goes out. So here I should credit the cash account with the same amount 2 lakhs. So here itself I would like to say another mode of payment. If at all, when I am making the purchase, instead of giving cash payment, if I make the same payment by way of check, then credit the giver. So banker is a person making payment on my behalf. So whatever might be the mode of payment, like cash or check, either way, debit part doesn't change. Purchase account. If for the purchase, if I am making by way of cash, payment by way of cash is credited. If I am making by way of check payment, I cannot credit the check. Who is making payment for the check on my behalf? My banker. So bank account has to be credited. So this is the one I have to understand. Anyway, here this is the cash purchase. I have credited cash account with 2 lakhs. Next is the one, another type of purchase where I am making credit purchase. How did I find credit purchase? Because the name of the individual is given. So as I told earlier, whatever might be the mode of payment, so by now you could have come to a conclusion, there could be 3 different types of purchases. Number 1, cash purchase. That is, giving hard cash. Number 2, giving check. Number 2. Number 3, credit purchase. That means telling the supplier that, sorry sir, I will give after a month's time or something. So this is called credit purchase. So either way, in all the 3, that is cash purchase, number 2, giving check, number 3, credit purchase. In all these 3, purchase is an expense. Obviously, there is no change in the debit aspect at all. So I am debiting purchase account with the concerned value. And since Rahim is the person from whom I am buying, he is the giver. Who is Rahim? He is the credit supplier for me. He is the giver. So as per the personal account, giver should be credited. So this is how I had given the journal entry for all the 4 transactions. Now let us get into the rest of the transaction little faster. Sold goods, it is implied that this is a cash sales. This is exactly opposite to purchase transaction. Here this is the cash transaction, that is cash sales. Cash is coming inside. As per the real account rule, debit what comes in. Since the cash comes in, I have to debit the cash account. So cash is debited with 5,80,000. Sales is the revenue, income. As per the nominal account rule, credit all incomes and gains. So this is the sales income I am crediting. Next, as I told you, there could be 3 different types of sales. What are they? 1. Making sales and receiving cash. Number 2. Making sales and receiving check. Number 3. Making sales on credit basis. What is this? So here Mr. Abdul is my credit customer. So what are the elements involved here? 2 elements. That is Mr. Abdul, who is receiving the goods from me. When I am selling, who is my customer? Who is receiving? Abdul is receiving. What is the revenue? What is the income for me? Sales is the income for me. So that Mr. Abdul and sales, these are the 2 elements involved. So here, when I am selling to Abdul, he is the receiver. So as per the golden rule of personal account, receiver should be debited. Okay. Exclusively I had underlined highlighted receiver also. He becomes the debtor for me. This amount would be reflected in the balance sheet under the column sundry debtors. This we would study in detail in later. Okay, sales is the revenue. As per the nominal account rule of golden rules of accounting, income should be credited. Yeah, this is how I got. Salary payment. Here, I need to make a correction that in the transaction it is given like salary payment made by check. Whereas by mistake, while generalizing, while applying the rule and finding out the journal entry, it is taken as cash payment. So you may kindly score it off. What to do? Let me just score off this as just salary paid. That means I should not consider this as check payment, simply as salary paid. That means by way of cash. So salary, as you know very well, it is a nominal account item, particularly expense. As per the nominal account rule, salary expense should be debited. At the same time, what happens? I am making cash payment. So cash is coming under personal account heading. So this cash is coming under real account heading. So cash, real item which goes out should be credited. So credit what? Goes out. So I am making salary payment by way of cash. And the last one, which is exactly opposite of the salary payment expense, the 8th and the last one is a receipt. Here I am receiving cash. It is implied that commission is received by way of cash. What happens when I am receiving the commission income? Cash, that real item comes in. So cash account is debited here. Debit what comes in, cash account is debited with 30,000. At the same time, commission which is falling under the heading nominal account, as per the nominal account rule, income should be credited. So here, commission account is credited with 30,000. So these are all the various application or the basis on which the journal entries are made. We have to practice as many problems as we can. So practice is the only secret. What is the secret? To be familiar with the application of golden rules on transactions and to bring the correct journal entry. Only to practice, only by practice. This is absolutely a skill development. Skill you can get the proficiency only by repeated practice. Hope you would practice with more sums. All the best.